This video is being recorded on the early afternoon of Tuesday, October 3rd, 2023. Thank you so much for joining me today. If you already haven't, please subscribe to the channel. I would really appreciate it. Thank you. And in this video, I'm going to talk about gold and silver's monthly and quarterly charts, because at the end of last week, we had the end of the week, the end of the month, and the end of the quarter. So, gotta love looking at those long-term charts. And, one thing about, weekly, monthly, and quarterly charts, they are the most significant at the end of those periods. So it's really not best to look at, a weekly chart in the middle of the week and draw strong conclusions. The same thing with monthly and quarterly charts. So it's nice that, we came to the end of the week, month, and quarter. So we're going to focus on the month and the quarter. And so with respect to gold, this action here is really disappointing, this trying to break out here. So obviously that failed, and we're seeing we saw the technical breakdown here. We might be at the start of a very short-term bounce here, but ultimately I think we're going to see, more selling into the end of the year. And so, you have this right here, which is 1825. So that's the first level. So you can see based on these candles, that's resistance here. It's support based on earlier in the year. So that's really the first significant level. And if you look at a daily or weekly chart, you also see that. 1810, 1820. From this breakdown, looking on a daily chart, it projects to a measured downside of about 1820. So, perhaps that could be the start of, a relief rally around 1820. But, it does show up on the monthly chart. Then we have right around here. So there's this gap here, right about 1765. So this line, I believe, is around 1755-ish, maybe 1760. So it's at the bottom of the gap, and it also it's at the bottom of all these candles. And it aligns with, after the first sell-off, after the peak, there's resistance here. Right here, if you look at this and you were to draw a line, I think that comes in at 1775 above the gap. So you could really say, if you tell me gold will not fill the gap, then I'd say 1775. But if gold is going to fill this gap, then it comes down to just above 1750. Now, with respect to silver, you have this line here, which I think is around 1870, something like that. I've mentioned this in the past. And, looking at silver, if we looked at, a historical 50-year chart, and I mentioned this in another post, right around 20, there's important support. So that's really the first level, and then you have just below 19. Excuse me. And so looking at the resistance, it's really at 25 now. You had look at all the tests on this quarterly chart, all the tests of 25 or 25 and change. And, of course, this is the start of October, but, then we can see in September, it's breaking down. The last couple of days, it's broken down. Measured downside target from this, I think, is around 1950. So that's really the first level to look at, 1950, 20. Then you have 1870. And by the way, if you look at the 80-month moving average, I did not put it in here, but look at a 50-month chart or 50-year chart of silver, plot the 80-month moving average, and that comes in, I believe, right around 20. So those are the two levels that we're looking at. Now, looking at the quarterly charts, this for gold, we've had the sell-offs the last two quarters. It doesn't look that concerning, honestly. You can see the cup and handle here, although this is, the handle is getting a little long in the tooth. But look, not necessarily, because you have 9 years here, and we're 3 years and 1+ months into the handle. So, the handle could last another year. It's certainly possible. But anyway, there's two levels here right around, I think this comes in right around 1775. So that aligns with what we're seeing on the monthly chart. Then, to be fair, I guess there's strong support here. Call it 1675, 1680. So those are the two levels on the quarterly chart. This one, 1775, it's also on the monthly chart. So, when you're in technical analysis, when you're looking at many different charts and indicators and moving averages and support lines, when they all point to a similar price level, I mean, that adds a lot more weight and significance to that level. So based on the monthly and quarterly charts for gold, they're pointing to, 1775, we can say with the gap, 1765. And we mentioned with silver, the two levels are right below 19 in the high 18s. And then also, I think, right around 20. And so in the quarterly chart, you can see, I think this is, call it 1870. But, we can see, look how many times silver on the quarterly chart has touched this level. It comes in right, the open of this quarter, the close of this quarter, just below 19. And so, we're seeing a sell-off, but I mean, obviously it's nasty when we're looking on the daily and weekly charts, but if you look at this quarterly chart, the sell-off has not been too bad as far as the last couple quarters. Again, this is the quarterly chart, so this is a real bird's eye view. So silver closed yesterday at 2138. If you round up that 1870, you get 19, a target of 19, and then again, there's also, historically, if you're looking at 50 years, there's a lot of support just below 20, including, again, the 80-month moving average. I could have, put an equivalent on this chart, but that's where silver is. So if we're looking at the key levels, based on both of these charts, the key support levels we're looking at for gold, we're looking at really that 1765 to 1775 area, and then for silver, we're looking at call it the very high 19s and then the high 18s. Those are really the significant support levels for these markets, and we're really oversold, so we're probably going to see a relief rally if it hasn't already started. But after that, we can continue to monitor everything. But medium term, I still think there's downside in the precious metals. Let me know what you think in the comments. Thanks for tuning in. Talk to you guys again in the next video.